وشاف قوم. وشاف قوم.
Hey guys.
Hi, everyone.
Hello, hi Irene.
Hey, Bernard, how are you?
I'm well, thank you. Yourself?
Is that a delay or is it just fine? I thought there was a bit of a delay.
No, everything is okay on my end. You can
And you
hear me
can hear
now?
me. Yeah, you can hear me just fine, right?
Perfectly, yes.
Okay. Just to give you a heads up, my power is usually okay, but today for whatever reason, it's kind of on and off. So you might have to just stay on and just in case that happens while we are carrying on. And yeah, we don't want to look stranded or anything. I have a generator, but there's always that break between the two. So maybe it's best that you stay on.
Don't worry not, I'm here.
Okay. I just talked to John, and as I expected, he didn't have the link, so I just sent it to him again.
Okay.
Yeah. Is Sam on? Sam is not here yet.
Sam is actually joining.
Okay.
Yes, let me see. Oh, Irene, we already have members in. Attendees are already in.
Oh, wow. Okay.
Yeah.
And 24 of them already, even before time. That's 15, yeah, 15 more minutes to go. Hello, everyone. If you're here already, then let's start by getting comments from you and telling me a little more about what you would expect to hear from today's event, and let's try and match that as closely as possible. If you have, particular topic that you want covered, you could start by letting me know in the comments below. Welcome everyone, but we'll do a clear and formal introduction once the session starts at 7:30. Hello, everyone. I can see some of you saying that they can't hear me. The reason you can't hear me is that our session will start in about 4 minutes or so. Then I will introduce our speaker, John, followed by Brian and Samuel. So keep letting me know how what you would expect, what kind of topics you want covered in the session. And also remember to email me if you're not in the mailing list, the business forum, because that's how you get to know future events. So for now, what I really want to hear from you is what you would expect from this session. And also, if you have started your journey in investing, what was that like? I've read quite a few stories from some of you. Some of them are really good. Some of them are hilarious. And others, people have learned from their mistakes. So let's see some of that come through. Let's see what you've been doing with your money and how you will invest differently after this session. Thank you. I already see some good questions. Can Forex trading replace your job? I'm sure some will have an answer to that. So that's coming up very soon. Keep them coming so that we can give answers to your pressing questions, so that we try and answer as many of them as possible. There is also someone else who wants to make trading a career as opposed to what she's doing now. So I see them and I'm taking note. So let me see more questions. Magdalene, can you hear me now? I hope so, because from the few interactions that I've had with the panelists, I can hear everyone just fine and they can hear me. I'm not sure why you can't hear me, but try again, maybe log in and off again. And a few others, is trading about luck or is there a technical aspect to it? Loving the questions. Bernard and Samuel will have answers to that. Gaurav will also have questions as to what's happening in the markets globally. So we are well covered. We are well covered. We'll have most, if not all, the answers to the questions tonight. And just in time, as I've always known him to be, is Mr. John Ngumi joining us. And it's exactly 7:31. So this session is officially started. And I'll start again by welcoming everyone that that is joining us now, has joined us tonight, and make time to come and learn about investing. You don't want to be those Kenyans who start to ask questions about an investment after they have committed their money. The session, similar sessions, is what you come to when you want to study about investing and you do your homework before starting to invest. And so, without further ado, I will start by inviting our advisor and speaker on several occasions, and he is also an authority in the investment scene in Kenya. And if you've been reading the newspapers, you know that he's been on several committees trying to streamline energy, power, and many other things. Maybe you'll tell us about that, John. But for now, we are very, very glad to welcome you once again. And this time we'll be looking to ask you a bit of a kind of travel down memory lane and tell us a little about what it looks like every time you've gone through elections in the past, and what you wish you had, you know, what markets looked like and what they should have looked like, and what perhaps you can, you know, recommend going forward, so that when we're investing, we are not kind of bound by the cycles of elections and wanting to run from the market when we should probably be strategizing different. So John, the floor is yours. Thank you once again for joining us.
Good evening all. Glad to be here with, I believe, Brian Myers and Samuel Kiraka. I mentioned their names because I want to start with a disclaimer. It's quite important in this context. While I have been in the investment world, and I will talk a bit about that in a moment, I am not a licensed investment advisor. Please don't ask me for any tips as to what you ought to be investing in. I was part of the people that drew up the CMA rules, and it would be bloody ironic if I ended up being a breaker of the same rules. So don't ask me for tips about should I invest in this, that, and the other. That I think my colleagues on this panel are far better equipped and, more importantly, are licensed to do that. When Irene asked me to come on this one, I wasn't sure quite what she wanted from me, mainly because as I've been out of the investment world for some time. But talking to her, I got the feel that she wanted a broader, somewhat historical perspective, which would then allow or be a segue to Brian and Samuel, whom I hope are on the panel already, for them to come in and now answer your burning questions about investments. So, without much further ado, I've just come from a 3-hour board meeting. I am not going to be too talkative today, but hopefully I will speak to you in comprehensible terms. First of all, about me and the world of investments. Without putting too fine a point on it, I'm definitely one of the fathers of the current institutional investor market, having started Loita Asset Management way back in '94 when Barclay Trust, now which has morphed over time into Old Mutual, was the only other asset management company, and we very quickly became the second largest. Well, there wasn't anybody else, but we very quickly accumulated nearly 4 billion shillings in assets, which in '94 was a lot of money at a time when there were no rules. It was a wild west, and I'm still amazed that I never signed a check for myself for 1 billion bob and took off to the Bahamas or something to settle over there. Now, in that period, we also pioneered research. We had a weekly bulletin, which was unheard of. Now, of course, all the brokers and others have masses of research. There was none here. We brought in the first foreign portfolio investors following the liberalization of the markets and of the exchange rate markets. That was, I remember very well, an investment by a legendary investor called Miles Morland into NIC Bank. And finally, we also promoted something which targeted undervalued assets. It was actually called a Regent Undervalued Assets Fund, which was promoted with Peregrine of Hong Kong. So I was quite active then, a big investor, a very loud noise, for the amount of knowledge I had, a very pretentious voice, but a voice in the market. On the sales side, of course, I think most of you know me more for coming out with debt capital market products, bonds and commercial paper, something we began doing way back in 1997. So that's, I suppose, my license to talk about investment, because I have been on both sides of the street, on the buy side and on the sell side. I found the title of today's talk interesting. Intriguing, I think, is a better word. Election season investing. Because the first and obvious question is, what is this phenomenon? What do we mean by election season investing? Second question is, why do we have it? Is it justifiable? Do we really need these focus? Do these paying special attention to it? And allied to that, do other countries have it? I've been through, since the multi-party era started in 91, I have been through every election as a banker or an investment manager, or as I am today, everything in between since then. And I think it's more a phenomenon that has been associated in modern times, and I'll come back to Back to the Future in 1963. It's been more associated with the stock markets. And really what it says is that because there is an anticipation of electoral turmoil, including maybe violence, right from the first multi-party elections in 92, then investors, especially in the stock markets and in the currency markets, have become attuned to a 5-year cycle where there is at the beginning of a parliament, there is a hiatus as people try to understand where the parliament and the administration are going. Then 3 years of furious work, and then the final year of sitting on their assets or selling off or repatriating cash offshore or doing anything of the kind. Now, is this justifiable? Are we so unpredictable come election day that we must all assume that the world will come to an end? At least the world as we know it in Kenya will come to an end, and we must leave and take our money elsewhere and allow our excitable electioneering to calm down before we return to invest. Unfortunately, while intellectually one can argue it's not, because all the Kenya governments in terms of economic policy have been pretty much the same. The reality is that we've come to believe it. We've seen some violence. We've seen some disruptions to market activities. We've seen people holding back. We've seen companies which depend on consumer goods, for instance, being affected by their clients being unable to buy. So while I think intellectually it doesn't make sense, or logically it doesn't make sense, it happens to be what the market believes. So my question as to whether is it justifiable is moot. It's there. We have to accept it. We have to accept that illogical as it seems, that phenomenon exists. Now, the fact that it exists, that should not mean, and I've seen this happen with so many investors, should not mean that you throw away all the investment principles that you've learned. Buying for value, long-term versus speculation, not following the herd, looking for opportunities which other people are not doing. And I think that where the smarter investors will reap and have reaped in the past, and I'll talk about that towards the end, has been when they have noticed that panic sales, panic departures from the market create extremely good opportunities for picking up the good assets cheaply. So the first thing I would say, without recommending any assets, would be that if you keep your head while all others are losing theirs, to paraphrase Rudyard Kipling, you should be able to get quite good value, especially out of stocks. Now, what asset classes tend to be most susceptible to election jitters? First and foremost is obviously the currency. The exchange rate is always the barometer by which we measure our markets. The fact that foreign investors see local investors selling off does mean that there is increased pressure on the currency. And the fact that not more currency is coming in adds to that pressure. So the first thing that tends to happen and is probably an exit of money. My guess is that for this coming election, those who would want to take their money out in any sizable sums have already done so. So if you are one of those wishing to take your money out, you're last, you're pretty much near the end of the queue. Are you going to see any big advantage in taking your money out now as opposed to taking it out before? It's probably the reverse with the depreciation of the currency. But those who want to take their money out already have. The other kind of stocks that tend to be, the other kind of assets that tend to be affected are those that are very dependent either on government goodwill, government favors, or government expenditure. We don't, at least on the stock market, have too many of those. I know there is one infrastructure company that was particularly dependent and remains particularly dependent on the public purse, but we don't have too many companies in, say, construction, in the or property development on the stock exchange. Then there are those stocks that are especially susceptible to interest and exchange rate risks. Funny enough, I remember an old investor who has since passed away was an accumulator of agricultural stocks at every election time. And his reasoning was sound, that the currency movements, the depreciation of the currency, would actually always be favorable to a favorable wind towards agricultural stocks, which were almost entirely geared, and I think they still basically are entirely geared to exports. Another stock is the only telecom company on the stock exchange, again, ever since the violence of 2007, which acted as a turbocharger to the development of FXPesa and other fears of people going to work. I would say that I have been told by practitioners in the trade that it is a share that also tends to see people, those who are smart enough and brave enough to stay in the game to buy that stock. And finally, those are assets that are directly affected by potential or actual election conflict, and those tend to be those related to land. Twice I have mentioned that I'll go back to the future, because I've always used this, and I used this example a lot when I was in investment management to skeptical investors, and I took them back to what was probably the most consequential election we have ever had, which is the 1963 general election. That election saw a major flight of capital. All our European, no, not all, but most of our European settler farmers feared that President Jomo Kenyatta would lead a government of bloodthirsty Mau types, eager to slit their throat and steal their land. And no matter how much reassurances were given by the then Prime Minister, then afterwards the President, that did not happen. They quite a lot still sold out in a panic on the market, sold out under the various settlement schemes that were put together by the Kenyan and British governments to buy them out. And a major phenomenon came out of that. And that major phenomenon is of our Kenyan Asian brethren as major investors in the stock market and in other asset classes. Because you see, many of them were either risk takers in the first place. You needed to be a risk taker to set up a dukkha in the middle of nowhere and trust that you would be safe as would be your investment. Or previously they had been restricted in owning land under the White Highlands policy, and had also not been restricted, but had not had much chance to invest in the stock markets. And very many of them took the opportunity to snap up what have since become really, really, really large assets in Kenya, sizable, influential in terms of market movements, which tells you the old adage that fortune favors the brave. I saw that also in the year 2000 when I was involved with Zimbabwe, when President Mugabe began his land expropriation policy. Again, I worked with some adventurous Englishmen who were prepared to go into those markets as other people were living. And if anybody ever wants to understand the mentality of such people, then please do look up a gentleman called Stephen Jennings, who founded the Renaissance Capital. And he will tell you just how much Renaissance made in those turbulent markets of Zimbabwe or Eastern Europe or other places where people were scared of the political consequences of change, which our elections tend to be. Let me turn to the coming election. I said earlier that in terms of economic policy, it is very difficult to see any real change. As it is, whatever government comes in, whatever administration comes in, will find itself hemmed in by some pretty hard realities. And unless they
John, yeah, we have a lot to hear from you, but for now you have 3 more minutes so that we can allow
not a problem, not a problem. But
right.
for unless the Kenya government goes wild and starts to impose exchange controls or other types of capital controls, I don't see any real economic changes coming out. So really, a rational investor will assume that Kenyans will continue eating and drinking and smoking and talking on the telephone and doing all the things that they do. And therefore, if you're brave enough to say that while personnel may change, the basic structure of the economy will not change, then I would say that there isn't great reason logically to panic. But as I said at the beginning, people will exit. And I think that I'll take that as my cue to leave it to the others who will tell you why you should invest in dollars or gold or any other of the other instruments out there at this electoral season. My point remains that there will be bargains to pick, that aside from headlines, I don't think you'll see huge economic tremors in Kenya that would justify a complete rethink of the market. Thank you, Eric. Over to you.
Thank you, John. That is a session that we probably will have separately because the history is quite intriguing. But for right now, that's perhaps what we were looking for. That should we be worried to invest in this season? Should we take our money and run? And so to everyone that's joined us, thank you so much for making the time. And I'll start by saying that we need to interact by texting global, the word global, to 40184, and there you'll get different options of where to from here and what to do with the information that you're learning as you go. So text global to 40184. And I would like to say now that the panel that's coming up is comprised of Brian Mayers, Samuel Kiraka, and Gurab. Brian Mayers is an industry-leading expert in wealth, trading, and fintech sectors, having held executive positions in world's largest brokerages. Brian is determined. I like this about Brian because we converge in our need to educate people to be investment savvy and not just, fall for the next thing that's introduced in the street. And so Brian will join us. Samuel too will join us, and Samuel is the EGM Securities subsidiary of Wakita Group CEO, and he's got more than 20 years of experience in the investment sector. So we're in very good hands. He will tell us a little bit about his experience and where he sees the market going. Gurav has more than 11 years experience, and why we're happy to have him today is that he can give us a little bit of an overview of what's happening in the markets globally. And if we decide to venture, what he would be looking at is the most suitable areas and sectors for somebody trying to, dip their toes. So we basically are spoiled for choice in today's session. There are also others that you can't see. They have hidden their faces. Monica Jagan is part of the team that helped put this together. And Bernard, I've worked with him for a long while now, and he's always one I can count on. And Colin Tarus, they are all members of FXPesa here in Nairobi, and they'll be telling you a little bit more about what we can expect. Most importantly, there was the award that we were going to give away at the end of the session for $2,000. I don't know who the winner is, but Bernard will be revealing that, as well as what next once we get the 1,000. And if you have some money to invest, where do we go? So for now, Samuel, we are very, very happy to welcome you. you will tell us a little bit about FXPesa and how it links to EGM securities, and how lucky we are that because of that partnership, then we don't have to have two platforms, one local, one international. We can get trading on the same platform. And then you'll walk us through the topics for tonight. Without further ado, Samuel, the floor is yours.
Thank you. Thank you very much, Irene. And good evening, everyone. It's great to be here. FXPesa is a local brand. And hearing what John is talking about, the season and the elections coming and the opportunities around the local market, it would be nice to also look at what's available out there. And that's what FXPesa brings to you. FXPesa is a flagship product of EGM Securities, which is licensed by the Capital Markets Authority in Kenya back in 2018. We basically are part of a Equity Group, which is a leading fintech solutions provider with now over 15 years in business. And in Kenya, we've been here. We are just about to mark our 4th birthday. So it's been an exciting journey over the last going to 4 years, having been licensed as the first one and trailblazing. And that's what we're doing. So offering instruments, and we'll be talking about a lot about that as a multi-asset broker, talking about what we offer, the CFDs, the indices, and Gaurav will be taking us through a lot more around that. But I must tell you that we also are on the Nairobi Securities Exchange as a derivatives broker. So the counters that John was talking about, like Safaricom, and of course the banks, the Equity Bank, KCB, APSA, and EABL, and BAT, and of course the NSE 25 share index, you can trade those futures on our platform. And then, of course, we are an award-winning broker. In 2020 and 2021, we did receive recognition with 2 awards as Best FX Broker in Kenya. Looking at Sam now, John is my senior. We have worked this journey together for a couple of years. And from the days of Safaricom Bond, I think that's when I interacted with John first. That was must have been the year 2000. And it's been an exciting journey just working with my senior to see how we continue to raise funds for this market. So going into what one stands to benefit, really, by talking to us at FXPesa, and my colleagues are on the call, really is offering a solution around global markets, opportunities to trade away from what we are used to. We are used to the NSE shares, the government bonds and treasury bills. I think recently we had the infrastructure bond. Government was looking to raise 75 billion, and they were able to pick people up to 132 billion was chasing the 75 billion, and the government was able to take about 98 billion of that, which is really a good bond because it's tax-free, and it's a long-term bond at around 12.9 to 13% per annum. I think that is fairly lucrative for the people who don't want to take much risk. For the retirees who want to take life slow. But for us, we are talking about making that kind of a return in a trade or two. And we'll be able to hear more around what can we do there. But really, we're offering a global financial markets opportunity where we train investors, walk the journey with them, train them on our platform, our MT4 platform, and of course of the FXPesa app that you can download from Google Play Store and get to learn, navigate. It's very easy, quick on the go. Get down there, www.fxpesa.com, and you're able to download the app. And of course, you can also go to MT4 platform and be able to trade from there. But what we do first is then to offer training, because if you're going to offer opportunity for investors to go global markets, then the first thing is to equip investor around the platform. The next thing is to show them what products are available, and we'll be getting deeper into that. We do commodities, so we would have oil, We have precious metals like gold and silver and others. We have shares and a good number of those. I talked about the NSE derivatives, and we also have trade currencies. Gold, as you may know, is the highest traded precious metal in this market. So like John was saying, maybe we want to pack their gold as they money into gold when they're looking at election season, and that's a good opportunity through FXPesa. In terms of costs, trading is done online, so very easy way in terms of costs. Yes,
Samuel.
Yes.
Samuel, before we get into how we get into the actual platform, maybe you could start at talking about the different sectors in Kenya and the stocks that you feel people should be looking at, so that when we get to how to do it, we at least have an idea of where we want to put them, put our money, which sectors. I believe that most people are wanting to find out what are this, low-hanging fruits right now. What might be an advantage presented by this season?
I think going back to the initial discussion or presentation that John made around the devaluation of the shilling, meaning that a safe haven would be to look at really stocks and the products I've talked about that are global. If you're looking at Kenya now, and some of them become undervalued as you go towards elections. When you look at what happened just around it, it's unfortunate, the pandemic, and it's very unfortunate. We lost friends, we lost family members, businesses. So it's been a tough season. So people losing jobs. But then what happened is that the economy pulling back, then it offered opportunities for somebody who had a bit more funds to actually get in and invest. And that hasn't changed much. So a lot of the counters, like the telecom counter we have, that is Safaricom, which is also on our futures platform, the banks, and they've continued to recover from the non-performing loans. I think we've been able to see that, the local counters. And like I said, we're also able to trade those as futures on the NSE through our platform. So yes, there'll be pockets.
Have you seen a change? Have you seen a change between when we started 2020 and now, given that we've just gone through COVID and it's not over yet? And what does that look like?
Yeah, yes and no. Yes, because there were a lot of people who then started looking for alternative sources of income. So you are working in an industry, say tourism, and I have a pointing case of someone who served me in one of the restaurants around, and when COVID came, they had to shut down. And so when I went to visit to check on whether they were back after the lockdown was lifted, I found the guy there, and he told me that during Corona, he actually went out to do business. And he joined onto FXPesa and was able to actually stock up. So when the restrictions were lifted, he was able to come back and be able to be a trader. So to be able to stock up his joint, his restaurant, and be able to do during the night, then he would trade commodities and indices on our platform. And during the day, he would actually sell up his stock. So yes, there are people who actually took the opportunity to learn. And we saw a lot because we opened up webinars and online classes and podcasts that were able to facilitate a lot of people who are very keen to understand and learn. On the other hand, is that, like I said, there were people who were looking for income, and this did offer them an opportunity to look for a second income.
Yes, thanks, Samuel. So the reason I'm kind of rushing you, forgive me for that, it's that we need to include Brian so that he comes and tells us what's happening in the global market. But before we get to Brian, there's a question that's burning on everyone's mind, and that's how you can perhaps do better with your money. Instead of spot betting, we need people to invest. What's your view on that? And for especially about young people wanting to bet instead of investing, and how how do we start to address that so that people do better things with their money?
Yeah, thanks, Irene. The critical thing is about literacy, financial literacy. And over the 4 years we've been in this business, that has been our core, because you want to get a competent team of young people, exactly the same people you've talked about, just left college, in their first job, they have a bit of a salary, they want to get a second income. So the first thing is to really get them to class, get them to understand about the opportunities available outside of their normal day-to-day activities. Those who've just finished campus, waiting to look for get a job, and you know the level of unemployment in Kenya is a bit on the higher side. So offer them an opportunity, and what we do is get them onto classrooms. So we now have 5 trading centers. We have in Nairobi, our Westlands office, where we can do both. We are doing virtual and we are also doing online. I mean, we're doing online and we're also doing physical classes. And in our other 4 locations, that's Eldoret, Nakuru, Kitengela, and Thika, we have classes going on a daily basis. And therefore, what we're doing is encouraging people to come and understand and walk them through the risk management tools around how do you become a good trader. Yeah, so it's around risk management, and therefore, once one is equipped, they will not need to try and go chase their money on areas that you've talked about. I think it will be more around, yes, equipping them, and they can come and learn, and the opportunities are available, and the classes are free.
Thank you, Sam. I'm looking for one last sentence on what sectors that people should be looking at. Just a brief sentence.
I think it's growth. It's in the growth sector, and then I think I talked about that, and I said, institutions like banks now, with the non-performing loans picking up, being settled, reducing on the NPLs and non-performing loans is offering a good opportunity, and that are local counters which are on our platform. Safaricom, for example, which is a telco and the only one on the NSE, again, pulling through, you can see what they're doing in Ethiopia and even on the local lending apps, and be able to generate, and of course, a lot more people joining these online, and data acquisition is very high and usage in the country. So it still remains one of the 2 sectors, I would say, financial sector and telco, for me still remain winning, and they are on our platform. So one can actually do futures on our platform for those counters.
Thank you, Samuel. We'll come back to you. We are not done yet because there'll be questions. So this, the first 15 minutes for every speaker is just basically to make the introduction, but much of this will be the Q&A session. And so we go now to Brian. I've been waiting for this session. Brian, I've been particularly waiting for your session because we can't ignore what's happening outside. You know, a few weeks ago, Ukraine wasn't even much of a factor, and now we have to perhaps worry about that. We have to look at stocks in a different way, which ones will kind of cushion your portfolio, all of that. If you could walk us through the global markets and perhaps the best way to approach it.
Thanks, Irene. That was a very nice introduction. Appreciate it. I'm speaking to you from Dubai, and I'll apologise straight away if any of my children run in while we're talking. They're it's bedtime and they've been shouting for their dad the last 10 minutes. But what are we talking about here? We're talking about why we look at global opportunities, and the main thing we're actually talking about when we're talking about that is taking control of your finances. It's not allowing any kind of any event, any market condition. So not allowing, you know, the situation in Ukraine or Russia, not allowing a local election in Kenya, not allowing anything to get in the way with what you need to do to get where you need to go in your journey towards financial freedom. We all want it. We all want to invest. We all want wealth. Why do we want wealth? Because we want the time to do what we want to do with the people that we love. And the only way that you can, in my personal opinion, that you know that you can get there, the surest way of getting there is by thinking global, is by looking at truly multi-asset. So what I mean by that is looking at shares from across all the world, looking at being able to trade gold, looking at being able to go long and short. And what I mean by that is making benefiting from the markets going up or benefiting from a falling market. Looking at stock futures, looking at indices. So this is a thing that it came to me about 10 years ago. I would say the penny really dropped for me because I had pensions. I was investing in funds. I was always looking for other people to do the hard work for me up until that point. And I think, like most people, I didn't even know the returns that I was getting from my pensions. We're seeing now some reports that are coming out from Kenya that 86% of Kenyans are looking at poverty line still entering retirement. More than 70% of Kenyans are entering retirement with less than 1 million shillings. And I always think the reason for that is that the whole way through their life, their financial literacy, what they've learned has been limited. They've been told to only think local equities plus bonds, what their parents did. In Kenya, they never had access to multi-asset access to trade all those things that I'm discussing, stocks, etc. And 10 years ago, I realized, it was the same thing for me. I was giving the bank my money to go into the markets to buy instruments where they would get 15, 20, 25% return. And then, believe it or not, in the UK, my return on my current account at the minute is 0.1%. So it was at that point that I realized that I need to take control. I need to start learning. I need to improve my financial literacy. And that's what we're doing at FXPesa and EGM all the way through Kenya. We're desperate to give that control back to people individually. We're going to educate 1 million Kenyans by the end of next year. We've been doing this for the last couple of years. It's fantastic that we can speak to people like you, Irene, and the Nairobi Business Forum. We're speaking to hundreds, thousands of Kenyans every single week. And this is what we're discussing. We're saying that just take your time, learn for yourself. Don't always trust other people. I think a lot of the comments that I'm seeing now even are, what do I've heard them before. Who can I invest my funds with? I'm asking for advice of other people all the time. We're seeing a lot of people going onto social media at the minute and looking, following influencers that have been looking at the markets for 2-3 months themselves and giving them advice on some cryptocurrency coin that they don't even understand what this is, what an NFT is, and investing their hard-earned Kenyan shillings in this stuff. And our proposition is, we're saying, look, slow down, learn for yourself, think long-term, think global. Don't allow anything to get in your way. And we're massively passionate about it. There was an S&P survey in 2019 that looked at the financial literacy rates all across the world. It went to European countries and it asked very basic questions. It asked questions such as, do you understand diversification of risk? Do you understand repayment on your credit cards? And where in Europe, 70% of people were literate, when they were asking the same question in Kenya, it was only 38% of people that were literate. So the problem that we realize is that, we need to get this conversation going more. We need to start talking more to people about the massive opportunities that are out there on a global scale. We need to open the door to access. We need to educate. We need to increase these literacy rates. We spent a lot of time this year speaking to universities. We were speaking to Strathmore and the University of Nairobi. We're spending our time speaking to the 237 people that are on this call at the minute. And our hope is that people go into their communities and they talk about this more, and they spread more knowledge, and they do more reading, and they take more time, through the reading that we can give them, and podcasts, and more television shows, radio shows, whatever it may be. And I think together we'll tackle this problem. This problem is so large that Alan Greenspan, the ex-Fed chair, said it's the number one, lack of financial literacy is the number one problem facing the youth today. And that's definitely the case in Kenya as well. So I think I would say that this is the key for me. It's to be in Kenya, to speak to people about improving their financial literacy rates, to get back control to people. And then through that, understanding things themselves, they'll start to look at global opportunities and they won't let anything get in their way.
Talk about with institutions like yours, the ease of accessing global markets. How does that work?
Yeah, it's just so easy now. When I first came to Kenya 3.5 years ago, I was probably out of the airport for less than 20 minutes, and I realized that Kenyans are very addicted to their mobile phones, right? I mean, Kenyans are very, very social. You guys, I mean, even in the UK, people spend 6 to 7 hours on their mobile phones per day. In Kenya, that's more like 8 to 9 hours. Kenyans are glued to their mobile phones. They're glued to their communities. They're always talking. They're always discussing. And I realized that, you know, if our company, if a company, and it's us, gave that access to these global markets through your mobile phone, that you can open an account easily, you can open an account in minutes, and as soon as you open up an account with us, we will start to give you the education, we will start to give you the seminars, we will give you access to trading gold. Do you think gold's going up or going down? Gold at the minute is hitting $1,900. You know, it's hitting highs, the recent year highs. Indices. You know, I remember myself when Brexit was happening in the UK. I wanted to stay well away from UK stocks just because it wasn't fitting my risk profile. I didn't want to get involved in UK stocks at that point in time. If I hadn't had access to the US markets, I wouldn't have been able to build my portfolio that I've got Apple shares at the minute. I've got Tesla shares. I started to go into those. And like John was saying earlier and Sam was saying earlier, if you keep your head in those environments, and if you have this easy access that we give, take coronavirus as an example. When all the stock markets collapsed in that March, I was in the market buying a lot of shares. I was in the markets waiting for the indices to increase as well. So these are, you know, as Warren Buffett says, fearful when others are greedy, greedy when others are fearful. These are the opportunities that you can get, but you have to have that global access. You won't get these opportunities in every region. My recommendation is to definitely take advantage. Make sure that you're using a broker. I hope it's FXPesa, of course, that you're using a regulated broker that's giving you access over the election time. Think global. Don't allow, if everyone loses their mind around the elections, which is very bizarre to me, because from my perspective, you know, normally I've been in Kenya and people have been talking about the election for the last 3 years. And normally I always think to myself, in my financial journey, it doesn't matter who's going to be in power. They're going to be the same sort of person. They're going to do the same sort of things. I don't care. I'm going to invest somewhere else in the world, right? I'll invest in Germany, or I'll invest in gold, or I'll invest in stock futures. So take advantage of it and position yourself. Yeah.
So Kenya has elections, and then the US has what's happening with Ukraine, and we also have inflation. I know Gaurav would touch a little bit on that, but you've been in Kenya, you know Kenya well enough by now.
I do, yeah.
So what are the kind of sectors that you would say, what are the go-to sectors that you would look at and say, maybe I should give this a second look?
Yeah, it's for me, it's what suits your risk profile as well. If you're an experienced trader, and Gaurav will touch on this, of course, you really embrace the volatility, right? So you would look at opportunity when, if there was a stock that you particularly liked and it was at a 15-20% discount, you would look at that as if it's an opportunity. If you believe that an economy is going to be affected by socio-economic conditions such as potential war, you can make money trading by shorting an index. So if you believe that German stocks or UK stocks or the US economy was going to take a dip, you can invest in a ETF CFD through us. So you could look at the S&P 500 if you believe that the US markets was going to continue the current correction that it's undergoing. So the opportunities are endless. The reason I'm not narrowing it down to one is because every single person has a different risk profile, and every single person, once they start on their financial literacy journey, they have certain instruments that they prefer to trade. Okay, so I love to trade gold. I love it. I understand it. I've monitored it for years. I understand technically, I understand where it's going. I understand the socio-economic conditions of it. I like the idea of it being a known safe haven in certain conditions. So I love trading gold. I trade oil as well. You know, obviously I live in Dubai. A lot of people around me trade oil. We discussed that. But you know, long term, I buy stocks. I've just bought. This isn't stock. This isn't advice, but I'm telling you what I'm doing. I've just purchased more Apple shares because I've seen a dip in Apple, but I know that this company is outstanding. I know this company's revenues are 120 odd billion per quarter. Is that going to be affected long term by the Kenyan election? No, it's not. Is that going to be affected long term by what's happening with Russia? Short term, yes. Long term, no. So I take a view on what I think globally is not going to be affected by certain conditions, and then I see any dip in those things as opportunity.
Thanks, Brian. And we'll come back to you. As you can see, there are several questions. Now, Gaurav, I think everybody has been waiting to hear if you have a crystal ball or something. So walk us through what's happening in the global markets and perhaps what sectors are kind of making you think I could make quite a little bit of money from this. And then maybe you could juxtapose that with what we have in Africa and our conditions and whether we should perhaps be looking at it differently. Welcome.
Thank you for the introduction, Irene. Brian, always a pleasure. Samuel, good to see you. I'm going to just zoom out for a second, guys. Brian's given us an amazing overview. Samuel's given us an amazing overview. John, too, about the conditions in Kenya and the opportunities in Kenya. It's a beautiful market filled with beautiful people. And yes, we need to link these beautiful people with the right broker, FXPesa, to deliver that type of financial literacy. And as a financial analyst here in Dubai, this is music to my ears, the efforts that Sam and Brian and Monica and the entire team are doing. But without further ado, I'm going to talk to you guys a bit about the macro global economic picture, kind of talk about what we saw in 2021, some of the main trends that were driving markets last year, and kind of tie that into what we expect to see on a global level in 2022. So on the surface, 2021 was quite a smashing year for investors. US equity markets capped off a record-setting 2021 that came despite the persistent and lingering headwinds of COVID-19. If we look at the indices, the S&P 500, which you can see, by the way, on the demo. And guys, if you haven't already done so, please, on your mobile devices, remember to text the word global to 40184. You'll be able to actually download these practice platforms whereby you can look at a lot of the products that I'm going to be alluding to today. And you can actually practice and trade on these. So as I was saying, the S&P 500 index was up more than 26% last year, and it had established new all-time highs on 70 different occasions in 2021. If we look at the tech-heavy NASDAQ, that also closed 21% higher over the course of the year, while the Dow Jones Industrial Average had a more than 18% gain. Now, these are fantastic numbers on the surface, looking at it. Overall, for the US equity markets, it's quite safe to say that investors such as me, you, would have happily taken another year of a 2021 type performance, especially seeing as to how markets have been performing through the first 1.5 months of 2022. But I'll talk more about that later. If we look at the currency markets, the US dollar index, which is a tracker of the value of the US dollar against a weighted basket of major currencies, strengthened more than 6% in 2021. Amidst the backdrop of a stronger US dollar, the euro, which is by far the largest traded currency, weakened by almost 7% in 2021, while the British pound was more resilient, closing just 0.8% lower on the year. But perhaps the biggest moving asset, which we saw in the currency markets, was the US dollar yen, which gained more than 11%. In the commodity markets, Brian's favorite gold, it dropped around 3.4%, while the real star in the commodity segment last year was crude oil, which gained more than 56% on the year. So that's some pretty good performance on the US crude West Texas Intermediary contract, which also is available on our platform. So guys, get that demo downloaded so you can see some of these moves on the charts. Now looking at volatility.
I was just thinking before you move to the next one, where gold over the last 10 years compared to performance like oil. I'm just trying to figure out why Brian loves gold so much. So what was the performance of gold over a 10-year period?
Well, for me, sorry, I'll explain why I like gold. So gold becomes very ranged. So you can make, even though the percentage increase in gold over the year doesn't have to be the percentage return that you get if you're a trader. So you can trade gold obviously going up, you can trade gold going down. And when it hits a range, as it has done quite frequently over the last kind of 5 or 6 years, it does stay very range bound. So what I mean by that is it'll have a resistance and a support, and it will go bouncing between those two. And traders absolutely love trading at that point. It becomes reasonably predictable, and that kind of feel we're in that moment. We have been in that moment recently.
Oh, perfect. Gaurav, you were talking about volatility. That has been quite something the last 2 years.
Yes, yes. As a trader and an analyst, and as you guys begin your investing paths towards financial literacy in these markets, you'll look at volatility trends particularly close. And as Brian was alluding to, gold is actually quite an interesting product for us and for our clients because it tends to kind of move and give opportunities both on the downside and the upside. So if I tie that into the volatility trends, we do have another product on our platform, which is called the VIX contract. It's the foremost benchmark index to measure the market's expectation of future volatility. So what that means is when you see a higher VIX number, and that number grows over the course of the weeks, that means that volatility in the market is high, and this generally tends to signal that perhaps there may be too much volatility in the market, and as a result, stocks sell off, gold will catch a bid, and the US dollar also would catch a bid. So we saw volatility actually drop in 2021 by about 25% from the start of the year. And what we noticed actually in 2021 was that you guys are maybe starting to see a trend over here. Equities shrugged off a myriad of negative factors such as inflation, COVID infection rates, consumer uncertainty, supply chain bottlenecks, global insecurities. And instead, we saw equity markets rally on the back of historic quantitative easing measure programs launched earlier on in 2020. So these aforementioned themes of rising inflation helped the US dollar and commodity prices move higher in 2021. And this theme of inflation was the most important to emerge from that year, so much so that it remains a key theme going forward in 2022. But before I want to look forward to 2022, I think it's a bit important to understand where we reach today on this interest rate theme, which is going to be a very, very key theme, guys. Anytime you turn on CNBC or Bloomberg, you will see the financial analysts and commentators, financial commentators, and intelligent people like John and Sam talking about, and Brian, of course, talking about inflation. So how exactly have we reached here? Now, if I can just take a few minutes to educate our audience. If we look back to when leading economies reopened from the first round of lockdowns back in 2020, the demand that had been built up over the course of these lockdowns was tremendously boosted as a result of these QE programs that all the global central banks had introduced. As consumers slowly came out of the lockdowns, they started shopping. Manufacturers struggled to keep up with these large avalanche of demand, and this caused severe backlogs both at domestic and overseas factories and ports. Now you fast forward 18 months later to 2021, this stressed supply chain of goods had not fully responded basically, and this has caused a continuous uptick in prices of commodities, end user goods, mobile phones, cigarettes. Across the board, we're seeing rising prices. Now, of course, central banks, they were avoiding this and saying that it was largely transitory, but clearly we are not seeing transitory inflation because 8 months on, it's still causing problems for financial markets. And instead, what these central banks decided to do was they continued to promote near zero interest rate levels, and they continued their massive bond purchasing programs. Now, it's important to know that the central bank, particularly the US, they have a twofold mandate. One is to control inflation, and one is to foster maximum employment. And now, with employment back on the mend in the US, now they are suffering with higher inflation, which they're trying to target. So this is prompting them now to have a more hawkish stance towards future interest rates, amidst this looming threat of reflation. And now fast forward to where we are today, this theme becomes the central theme of financial markets and is one of the most important themes of 2022, actually.
Gaurav, as we look at what's still to happen, could we perhaps get to the year 2022? What do you see, assuming that we don't get another, something catastrophic or, like we had in 2020 with COVID, given some of those factors remain constant, what sectors are you thinking to look at?
That's a fantastic question, Irene. Actually, I was in preparing for this presentation for you all today. I actually came across a report from the Bank of America that showed that amongst the most active fund managers in the US and globally, the top perceived market risks and tail risks for 2022 are the following, basically. So at 44% rating of how big that risk could be, was the hawkish central bank rhetoric of global central banks. Of course, this starting with the US, then of course petering out to the EU, and of course then the Bank of England. This was at 44%. Inflation threats for fund managers is the next biggest theme of the year. That's sitting at 21%. Asset bubbles and global growth fears of slowdown come in at 9% and 7% respectively. And of course, unfortunately, the COVID-19 resurgence, potential resurgence, if God forbid we don't have one, but that also is still on the mind of hedge fund managers. To this list, I would now also add the escalating tensions in Ukraine, which would be near the top of this list, particularly in the short term. But I have some more ideas on how to play that a little bit later. But if we start with the former, this hawkish central bank theme and inflation threats is still the number one focus should be the number one focus for our investors.
Oh, perfect. And now I'm sure we'll come back to that, but we'll basically start to go through some of the questions. And one of the main one, or at least has come up quite a few times, is maybe to you, Brian, the currency, the dollar and or others, or the different pairs to the dollar. How is that shaping up in this year, and what should we look out for?
I'll hand that over to Gaurav, our trader.
Yeah.
What was the exact question, Irene? How does the dollar relate to?
Yeah, there's some people who are concerned that the dollar, given where it is now and with inflation, the different pairs, whatever strategies you might have heard, you have to throw them out through the window and start looking at it a little differently. What do you see happening generally with the dollar and all the pairs that are related to the dollar?
Perfect. Well, just to take it to a bit of a basic level, when trading in the currency markets, we're trading currency pairs basically. So you'll always have a quote currency and you'll have a counter currency. Excuse me, you'll have a base currency and you'll have a quote currency. And when one currency is appreciating, the other is of course depreciating. So when you're buying a currency pair, you're actually selling a second currency pair. So having said that, most of the pairs that are trading against the US dollar, so for example, euro dollar or the British pound against the US dollar, the US dollar against the yen, we've seen a trend throughout the start of 2022, which would suggest a slight dollar bias. What I mean by this is that there's been a larger buying spree into the US dollar versus currencies such as the euro or the British pound. And we kind of expect, well, me personally, I expect to see this continue because of the reasons of what I've highlighted. Inflationary threats, which are causing a lot of headaches to central banks. We are going to be in a situation where the US central bank will start increasing rates as early as March. And typically, Economics 101 will tell you that once rates start increasing, that tends to strengthen that particular currency. So on a very basic level, all signs are pointing to an improved performance for the US dollar through the initial quarters of 2022. And I think because of the geopolitical risks that we're seeing as a result in Ukraine, plus we have the US midterm elections coming up in November, this also can tend to bring a lot of volatility into the market. So in a nutshell, when volatility is high, guys, US dollar should tend to benefit. When markets are very calm and people are investing and there's no fears in the markets, that's traditionally when you end up seeing a weaker US dollar because people are moving in towards riskier assets.
Perfect. Brian, the question for you was for oil and what's happening now with Ukraine and what you perhaps, I wouldn't say predict, but what do you see happening with oil going forward? Because there is a bit of tension and we can't ignore that.
Yeah, Gaurav, do you want to take this as well? It's similar to John, guys. This is, I mean, people that follow me on Twitter will know Brian_equity. I'm all for highlighting opportunities to go either way, but when if people are looking for intraday trade movements, it's always best to fire the question at Gaurav, who's looking at the markets intraday. I look at definitely intraday and medium term as well, but Gaurav's your man to talk about these things.
Thanks, Brian. To be honest, Irene, I would tell our viewers today that the opportunities in crude, although it has rallied all the way up, up into the mid-90s this year, off the back of an amazing 2021 of 56%. What this does do is it does create opportunities in crude. Now, depending on your view, whether it's long or short, you can capitalize on this opportunity. I mean, is crude in a position where it's going to correct? In fact, famously, when you guys are free and you end up downloading our demo, you should pull up the historical chart and you'll see actually in 2020, the crude contract traded in negative. It went as low as, well, on the exchange, it went as low as negative, I believe it was $7 or $8. It basically had gone below zero, can you believe it or not? And fast forward to 2 years later, we're back up above 96. Now, this is insane price movement and insane opportunities. Now, just tying it back to kind of what I see in the energy markets. Now, because of this inflation theme, and I'm going to sound really boring because I keep referring to this inflation theme, but it's true. I personally believe that, and please do your own research, but I personally believe, and I write in my published articles, that because of this these current price pressures, and we've not seen an end to it yet, as long as we keep seeing higher CPI prints, this will continue to support commodity prices across the board, whether it's agricultural, whether it's metals, whether it's energies. I believe mining companies will also do quite well. But overall, it would not surprise me if we can see crude even touch maybe 120 to 140 to start trading in this range, particularly if we see escalating tensions as a result of Russia. If we see this situation kind of diffuse and fall off the map like it did in Crimea in 2008, then I don't expect to see 120 a barrel. But on the higher side, yeah, 120 to 140 would not really surprise me amidst all the current problems.
Do you have a time frame, perhaps?
Well, to be honest, I don't. Looking at the technical charts, technically, I don't expect to see crude falling below 70 to 72 this year. Again, upsides would be capped at 120 to 140, but again, that's purely going to be driven on fundamentals if we're around Ukraine. But if this inflation theme continues as it is, and I think we will see a taper of this inflation theme probably after the summer months, once the Fed has gone ahead with 2 or 3 interest rate hikes, I think you're going to see crude trading in this range between 72 and 90 throughout 2022.
Oh, perfect. And a question for you, Sam. Someone is asking leverage trading and how to manage it well and manage your account, and whether the views of leverage trading have changed within our market, where some people feel that it's perhaps a little too much to take on. How do you use leverage to your advantage in this market especially?
Yeah, thanks, Irene. The idea of leverage is actually using more resources than you have in your hands. And therefore, it's part of the risk management tools is also teach our investors around how to manage that so that you only take up to the limit and appetite that you have from a risk perspective. So even though it's up to 1 to 400, one can do it even much lower, and it's recommended that then one keeps, you can go adding on to your the leverage level based on your experience and expertise, and also of course what you're getting into. So yes, previously this has not been taken up, especially in the earlier days, but more so in the banking sector where we discuss a lot with the bankers. They have actually don't consider leverage products. They actually look at sport and stuff like that. But for us, we encourage, and through training, as we engage in training, we share about the risk management tools around how do you manage to ensure that you don't expose yourself too much when it comes to leverage. But it certainly gives somebody an opportunity to trade more than that, what they have in their hands.
What I'm hearing is for most people who are perhaps new in the market or newish in the market, they should perhaps get trading right before they consider leverage. Then talk a little about onboarding, because there's people who are asking.
Could I just add to that point as well? Because that's a really, really important point that we're discussing there. So one of the things that I'm noticing, one of the things I've noticed is that this forum has been a lot more advanced in talking about risk management, leverage, and having those sort of conversations, which is absolutely fantastic to see. Because sometimes what I'm noticing, particularly with the young that are coming through, they're getting bombarded with the notion of going for 10,000% returns on some cryptocurrency coin, and an influencer who's pretending they know what they're doing is screaming about the return on something that someone doesn't understand about. And these are the questions that people are asking about leverage, about what products should they focus on, about taking control, as I'm saying, and reading for themselves. This is the conversation that we need to be having. This is the conversation in Kenya that and it's great to see. Ask these questions. Ask, like Gaurav said, get on the demo, trade on the demo with us for a period of time. Look at your leverage. What's your risk profile? Do you want to trade commodities? Do you want to trade FX? Read more. Don't come to people and ask for crystal ball. The only people in that situation, the only persons that are getting rich from a get quick rich scheme are the people that's selling it. Okay, I'm not going to anyone and saying, what do you think? I'm more than happy for someone to reinforce or otherwise my own view, but I'm not going to follow blindly the advice of someone else. Financial literacy and what we're offering at FXPesa is giving you all the tools and the education yourself to be able to keep learning. I've made a lot of mistakes in trading. I've made a lot of winnings in trading, but every single time I've learned for myself. And when someone else is going over these things and telling, this is the leverage you should use, this is the product you should trade, this is the level you should get in at, you don't learn anything yourself. You've got to do the reading yourself and develop. So it's fantastic to see that people are asking these questions. It really is.
Perfect.
And just to add to Brian's point, it's an excellent point. And even I'm sure Brian and Samuel, with so much experience behind them, they'll probably also tell you that it's not you learn something new every single day. It's a continuous learning process. I mean, I've been in this market now for 15 years, and I learn something new every single day. There's really no right or wrong answer. Everyone has their own answer, and everyone can find their own opportunity, their own niche within this market. And because there are so many products that are on FXPesa's platform, once you find the right one, whether it's gold for Brian or whether it may be indices for somebody else, you can only know that until you practice and you learn it yourself. There's no easy shortcut.
Okay, so Brian, back to you then. Someone is asking, what about hedging in case I don't consider stop losses?
Hedging in case you don't. So yeah, interesting question. So the fact that people are talking about stop losses here as well is fantastic. The fact that people are talking about hedging, either hedging on the same product or they're hedging across different products. Look, this is the thing. I would always recommend, when you, particularly if you're a short-term trader, and particularly when you're starting out, to always use a stop loss, to always actually work out how much you're putting at risk. Okay, and what you normally find is that the best traders, they keep the open end of their trades open. They run their winnings and they cut their losses early. And you will always see that consistently. We've got hundreds of thousands of Kenyans have come through us at FXPesa, and I've been very fortunate enough to deal with millions and millions of traders across all the world, in every single country you can imagine over my career. And you see this common mistake always. You see the mistake that people don't use stop losses. They become attached to a trade. They don't want to cut a trade early. They don't input their take profit or their stop loss before they enter. And this is something that really, we're getting to the point of it here. If you read about these stuff, read about how you can hedge against certain things. So, for example, why I like trading gold sometimes is that I have a reasonably big stock portfolio. And occasionally I might trade the opposite way to my own holding. So I might own an Apple share long term. I'm going to hold it for the rest of my life. I've got Apple shares for my children. I've got Tesla shares for my children. I've got, etc. But occasionally there might be news that I think in the short term I want to hedge against that, and I might want to trade gold long, or I might want to trade the opposite way that I'm holding my long-term share, because I believe in that short-term potential to make money. So again, fantastic questions, guys. This is, I love this. You really get into the bottom of this stuff.
Then I will ask, is it possible for FXPesa to provide two accounts to one person, one where you could do the short-term trading and one where you could see the longer term?
Yeah. So there's so you can, depending on what product. So I have a blend of different products that I like to trade. So I might hold medium to long term, something like an ETF. So we offer ETFs within our platform. I might think that I want to hold Apple for 1 month or 2 months over an earnings season. I might want to go short term on euro dollar, because I think there's going to be something that's going to impact the dollar. So we give you the possibility, all within your own account, to do all of those things. And the thing that Kenyans really didn't have until we entered the market to any big degree in a regulated environment, regulated by the CMA, was to make money in falling markets. If you believe that a currency is going to go one way, if you believe that an index is going to go one way, someone on the chat is talking about the DAX, Germany. Every single year you could probably expect a 10% correction in the stock market. Three times in my lifetime, there's been a 50% correction. In those environments, when everyone's losing their head and screaming, running out the building, you, through our platform, can still make money. And that is a true access to global markets that everyone, I believe, needs to have in their artillery when they're investing.
Did you say, someone said here, Brian, that you said somebody with a small account gets kicked out of trading? Did you allude to that? I didn't remember hearing that.
Definitely not, no. You can start with us with $5, equivalent to $5. And the only reason that's there is obviously we would always recommend. So we consistently talk about saving, learning, investing, and being patient, right? Save, learn, invest, and be patient. So we would say to people, if you've only got $5 or $10 and you want to try because you want to do very, very small trades and you want to learn with some real skin in the game alongside your demo, then fine. But if really you've only got $5 or $10 to your name, maybe you're not ready yet for investing. Maybe take a breath. Maybe save a bit more. Maybe we say to people that only come into this when you're comfortable to do so and when you've learned enough to do so. And you start to understand the things that we're discussing: stop losses, take profit. What does hedging mean? We will give you all of the education, and the kickoff to that is to text the word global to 40184. We will give you all the education that you need and more. We're consistently, we've got a whole company of hundreds of staff, and all we're doing all day long is working out how we can get this information to you. As Guru's saying, we're all learning, all of us together, a big community, learning every single day, more and more. So we'll get that education to you. When you're ready, invest and be patient. Be patient with your trades. Be patient with yourself. I feel the biggest risk to people that are stepping into the market for the first time at the minute is that they over expose themselves to risky trades immediately. So they'll go into a huge trade on a coin that, again, they have no idea what they're talking about in crypto, or they'll go into something that someone else has told them to do. That trade will not work, and then they never trade again because they didn't learn anything. Or if it does work, invariably the person thinks, I would have made more money if I'd have gone deeper. So they put more money in this time, and then it doesn't work. And what I'm saying is be patient. Be patient. We've all, I in my first year, in the first 4 years of the data that I've looked at, people that have traded over 4 years in the data that I've looked at believe that they're successful 80% of the time. Now, what that means is you're going to have a real journey in that 1 to 4 year bracket, really learning every single day. But the more you get under your belt, the more time you get under your belt, the more learnings you've had, the more successful you're going to be. And that definitely happened in my lifetime. I learned a hell of a lot, some the hard way, some the good way in the first 4 years. But then I've learned every single year now, I consider myself a better trader as time's gone on. So you just have to make sure you're doing the right thing in that early period.
Brian, you walked right into this one. I would like to hear the kind of the mistake that you made and thought, oh, that's really stupid. Which one was that?
The very first trade I ever did, I was 6 years old with my father. We bought Marks and Spencer shares, I remember, and we won a lot of money. I mean, we earned a lot of money from that trade. I learned very, very early on that the next time that we went into something, we went, I still remember the name of the company, Atlantic Caspian, it was a penny share, and we went into it because someone else told us that it was a good investment to get into. We didn't do our own research. So, and that wasn't such a good investment. In fact, it went nowhere. And I learned the lesson very, very early on that I was not going to listen to other people that I have no idea what their history is, what their motivation is, right? Like nowadays, when you look at people on social media, influencers, just understand their motivation. When you see them leaning against a Lamborghini that they've hired for the day and they're screaming to you to buy some coin, they're getting paid somewhere behind that for you to do it. It's a Ponzi scheme or it's a scheme, right? So it's understanding that, and I had to learn for myself. And from that day onwards, that was my journey, starting to get a bit better as a trader.
Perfect. I will ask you the same question, Gaurav, but before I get to that question, somebody asked a good question. Market crashes and how to not get caught out. First of all, explain to us what a crash is, and then how do you cushion your portfolio from something like that? Because there are times when you wake up in the morning and you're like, what the hell happened?
That's a fantastic question, Irene. Actually, there are a couple of ways, actually. I think technically the definition for a crash is a market move of more than 20 or 25%. Now, what we're seeing right now in the current state of the equity markets is a 10% move. And that means we've entered into correction territory. So if we just take these current times, what we're seeing in the US markets, the best way to navigate and to protect against further downsides is to, by far, guys, you have to have a very, very balanced portfolio. Now, I mean, Brian's been alluding to it pretty much all evening, but not having only exposure into commodities, for example, including into that basket of stocks, for example, which are across various sectors. You could have stocks that are in the telecom sector, you could have stocks in the technology sector, you can have stocks in the overall ETF of the indice. You could be buying the indice. I'll give you a very simple example. Now, every year I put some money into the markets. Unfortunately, year on year, you're seeing, because of the performance in January, February, that the market has come down. But why am I not panicking? Because I'm not over leveraged. As Samuel said, I'm making very good use of leverage. I'm under leveraging actually in these types of environments because I don't know how much lower we can go. But long story short, what I am doing now to hedge myself and to protect against further market risk is every week I'm putting in a smaller sum of money to average in at these lower prices. Now, what this will do for me in the long term is it's going to bring down my average buying prices. And when the storm is over and we are in a period where markets are a bit more stable and calm, I'll have an easier opportunity to kind of get out of the markets. But again, it's all about having a balanced and structured portfolio, and it's all about making sure that you're using leverage properly and you're not overextending yourself, particularly in high volatile conditions. And again, guys, when you're on the demo, I seriously suggest you to favorite the symbol. It's VIX on FXPesa's demo platform. Again, I repeat, it's VIX. The VIX index is a very, very good indicator of when volatility is high. So when volatility is high, guys, then perhaps you're not going to be using the maximum leverage. Maybe it might make sense to invest maybe 50% of what you originally were thinking. So this is the best way to navigate, amongst these falling markets.
Thank you, Gaurav. John Ngumi, are you still there? I know you've had a long day, but I would like to ask what your view is on the market going forward. And you just told us not to panic. So I'm thinking you might have some sectors that we should look at, and then hopefully Sam can confirm that they are the stocks are traded on FXPesa, that we can still get them.
Quite frankly, Irene, two things. I think your speakers have told you where to go. Anybody who's been listening will get all the tips that they want. And secondly, I stand by my earlier stricture that I refuse to say which assets or which because I am not allowed to do that. But more important, I'm actually participating unusually in learning rather than teaching. It's been very fascinating, very educating, and has reignited my waning interest in personal investing. So let me pass on that question, if only because I'll be marched before the CMA for telling anybody what to invest in. Okay,
all right. Then I'll let that one slide. We're always grateful that you when you come and see us. And so Samuel, since you are, could you just let everyone know, please, that FXPesa is a licensed institution, and so right off the bat, some of the due diligence that one has to do when considering who to trade with is that you're licensed, and then walk us through on a very high level how to get onboarded and start trading for beginners, because this is a business forum. A lot of people know what trading is and have even traded, but there are those that are starting for the first time.
Yeah, thanks, Irene. A lot of good stuff coming up. And yes, as I said at the beginning, there wasn't this kind of legislation. And in 2016, 2017, including team that is within Equity Group and others worked to the CMA to try and get this legislation done. And in 2017, the online non-dealing brokerage regulations were issued by the CMA. And in 2018, then we got licensed. What that means is that we have the eye of a regulator. So working in a regulated environment is not really just about regulation, but it's about the level of trust that then this offers investors, that we are able to work within an environment where the monies are safe. So the clients' monies are safe. The regulation does require that we segregate client funds. So as an investor coming on our platform, then one would have to put in their money, their trading account will be very different from the accounts that the business runs to pay expenses of the business. And that's a regulation requirement. And of course, there'll be inspections and engagements with the authority on an ongoing basis. When it comes to onboarding, again, it goes back to the regulation. the regulation do require that we work on a very high level KYC, know your customer, so that then one of the things to do is to ensure that then you don't have funds coming from terrorism or any money laundering activities. That is very, very key within the industry, and not just EGM, but generally under the Capital Markets Authority. So we would have a very strict compliance and onboarding process where we actually get out, and it's very easy because it's online. So what all one needs is to give a copy of the national identity card and a PIN certificate and a POA, a proof of address, and one will be onboarded. It's a fairly quick process. Within 7 minutes, you become a customer of EGM. So you are and FXPesa. So the onboarding process is quick, and generally those 3 documents are available. I mean, most people move around with their IDs, and therefore the only bit would be the PIN number and POA of where one lives. So it's the onboarding process is very quick, and then of course we'll run the tests just to ensure that it's a valid ID and stuff, but it's fairly quick and easy.
Thank you, thank you. So Bernard, I would like to hear from somebody who has actually traded, and I was thinking you could perhaps let in Vimal Chinasama to tell us what his experience has been since he started trading, how his account has grown, and what perhaps were the low-hanging fruits of somebody trying to get into trading now. Vimal, welcome.
Hello, can you hear me?
Hello, hi Vimal, we can hear you.
Hello.
Vimal, are you unmute? We can hear you.
Just a minute, just give me a second. Just a minute. Hello.
Hi Vimal, can you hear me now?
Hello.
Okay, maybe we'll come back to Vimal. Bernard, if you could help him with the setting.
Hello. Hello. Yeah. Hello.
Vimal, can you hear me?
Yeah, I can hear you. Can you hear me now?
Yes, we can. We can hear you now. And what I was saying is that if you could walk us through your briefly high-level journey through investing with FXPesa and what the low-hanging fruits would be for someone looking to get in, and whether your portfolio has expanded since you started trading.
Yeah, sure. Thank you for the opportunity. Trading. Okay, I'm an ex-banker. I've been in Treasury Department in banking, and that's where I learned about trading. I got so much interested in trading in around 2008-2009 year. That time we didn't have local brokers, and I used to trade through other offshore brokers. And of course, I did not learn trading overnight. There were so many ups and downs with the market, and I lost a lot. I gained a lot again, and there has been a lot. And I started learning more about trading through reading, conversing with other traders around the market, watching YouTube videos, doing research on Google how markets work. I then realized markets trading is all about fundamentals, and it's all about technicals. Yeah. You can be a fundamental trader, you can be a technical trader, and depending on what you choose to do and what you choose to learn. And it's not been easy, but with time you learn a lot about trading, and every day you're learning different things, how markets work. It's all about economics, again, fundamentals.
Vimal. Yeah, Vimal, if you could, just in the interest of time, what people were happy, perhaps you could touch on is your experience, for instance, where you started with FXPesa and where you are now. How has that journey been? And especially what does your portfolio look like now? Even if you don't mention figures, you could talk about maybe percentages of an increase in your portfolio performance.
Sure. Well, I'm a freelance short-term trader. I just do it on my own.
Yeah.
And with the I started trading through, okay, as I said, I used to trade through offshore markets. And then when I heard about FXPesa EGM coming to the market in 2018, that's the time I started trading through them. And it's been a good journey. And of course, the rates, the margins, the spreads, everything is perfect. I have my own account manager, which is very, very easy to get in touch with. Withdrawals are very easy, doing local withdrawals. The good part about it is you can trade in different currencies. You can trade in you can open an account in a different currency, dollar or shilling. I mainly trade in dollar. I'm a daily trader, day trader basically. So what I do, in the morning I look at the markets, I read about the markets, then I wait till midday till the UK, US markets open. Later in the evening. Usually I can say trading, you can make up to, in a month, approximately 2 to 5% return in a month, including all the stop losses, take profits, and all the fundamentals of the markets and everything. That's on the lower side, you can say. And as I say, trading is the key to trading is risk management, and that's
Vimal, how
what
is your
Vimal,
how is your portfolio doing? How is your portfolio
it's good.
doing?
As I said, in a month you can make about 3%. So you can say in a year you can say about 36%, 24 to 36% on the lower side. And my portfolio has been good. I diversify on different currencies, different asset classes like indices, mostly US 30 and DAX 30. That's a German index. A bit on gold, a bit on currencies, and it's all about balancing on all the sides. And as Gaurav and the rest of the team said about hedging into the markets, if one currency is falling, the other one is rising. You need to know how to hedge. You need to know how to arbitrage in different currencies. And that's what I can say about the markets and about my portfolio.
Thank you, Vimal. We needed a testimony of somebody actually doing it, aside from the team, and that helps a great deal, because what you're explaining is that you can actually pay your bills if you're prudent.
You can.
Yeah, you can pay your bills just by trading. Gaurav, before we get to Bernard to tell us the winner of tonight, somebody is asking, you described the crash, but you did not describe the opposite of that and how to take advantage of it. So the crash is when it goes down 25%. What about when it's going up 25%? How do you take advantage of that?
See, Irene, what some of the parting comments or thoughts I would leave some of our visitors today with, and of course they should, again, I keep saying it, but they should really contact the team in Kenya to get some more ideas and some more education regarding this. But before you foray into the global financial markets, you have to have a bit of a plan, and you have to be realistic with that plan. Now we've seen an amazing performance by Vimal, and I'm sure with someone of his experience, he's probably approached the market with a clear plan. So the reason I'm saying this is be realistic with what you expect to achieve from the market. One fantastic byproduct is, of course, the education. The other fantastic potential output is the the side income that one could potentially generate from investing in the global markets. But once you have that plan, then you yourself will know what you want to do once the market's at 25%. For example, for me, and probably similar to Brian, who's invested in a lot of the same stocks that I've heard him invest in, I'm also in those similar stocks. So if the markets are going up 25%, or if the S&P is plus 25% in 2 years from now, because on average you can expect maybe a 12 to 15% gain on the S&P, am I in a position to necessarily sell that part of my portfolio? Probably not, because again, my plan is to have wealth creation. My plan is to not have physical US dollars, sitting in my bank account, not doing anything. So I'm very happy for that side of the portfolio to continue gaining. And guys, with this compounding interest, and I really want everyone to Google this concept, and of course, email and contact us on the side, contact Monica, Bernard, and myself. But understand what is compounding interest. That 25% that you gain in the next 2 years will become, even because of compounding interest, will accelerate in year 3 and accelerate in year 4. So it really depends on the person's time frame. And I think if you're going to get 25% in this market, then it's going to be at least, probably realistically, at least a year and a half. And that's a very, very good performance to get it in a year and a half, to be honest.
Absolutely.
I hope I was able to answer the question.
Yes, absolutely. Because what you're saying is that that element of trying to perhaps time the market may not work. You should have a strategy going in. So I think that's what she was trying to say on how to take advantage of the market, because you can't exactly predict when. You must have a strategy, and that's where you guys come in, that you'll be educating. Brian, someone is asking, what has your experience been on educating young people to start trading and investing as opposed to get rich quick betting and things like that? Because we have Honorable Charles Odonga here, who says that first of all, we should do more of this. And next is that we cannot run away from the fact that there's a lot of risk out there because people are not educated. And so I'm thinking, as young people seeking out the opportunities to learn, what has your experience been?
This is what I'm extremely passionate about. This is the thing that kind of gets the blood pumping for me, because I see a perfect storm at the minute where there's never been a time in history, in my opinion, that there's been as many people as interested in trading as there is now. So there are tens of millions of people coming into the market globally for the first time that are interested in trading. Now that trading is into gold, it's into FX, it's into cryptocurrencies. There's lots of questions about cryptocurrencies here, NFTs. But because the perfect storm comes from this, more and more coming, which is great because people are thinking about their financial future. But I'd also argue that it's never been a time that there's so many people investing in stuff that they just don't understand, and they're following people because of the internet, and they're following people also that don't understand what they're doing. And we are now, with the young, in a period of instant gratification, right? People now of a young age, if they want a date, they want to swipe right. If they want some food, they want it delivered in half an hour. It's just instant gratification. And that is kind of counter to what I've seen in my career makes a long-term successful trader. It's not about time in the market, it's time in the market as well. So what that means is not just for your trades, it means the longer you're in the market, the more you learn. So we took this, we said, how can we use our time wisely in lockdown at the beginning of last year? And we went on a virtual roadshow of universities, as I said, Strathmore, University of Nairobi and others. And it's the same in Kenya like it is everywhere else in the world. I did an economics degree where 95% of it, I have absolutely no idea what I learned for 3 years. I couldn't even talk to you about it, but no one took the time to explain to me what Gaurav's talking about there, compound interest. No one took the time to explain to me the difference between paying off your mortgage early at an interest rate compared to investing it somewhere else. They say that those that understand compound interest gain from it, those that don't pay it. And it's things like this that would have put me in good stead for the rest of my life that's not taught to the young. And we decided that we were going to change that. And that's what we're doing. And, you know, we went on this fantastic virtual show. We're going to continue to do that. We're doing a lot of podcasts. We're doing a lot of more of these series. We're doing webinars series. We're educating, as Sam mentions, in Thika, Kettingela, Nakuru, other branches. It's a process, and we are not going to stop. We're relentless until we change this problem that's facing us today. And we just keep going and we keep educating.
Thank you, Brian. And I'll also emphasize, and Bernard Brian will emphasize this as well, that you have to be careful what links you're clicking, because I can see even within the chats, there are links that have FXPesa in them, but have nothing to do with FXPesa. So you always have to be careful who you're interacting with.
Exactly. This is my point, Irene. Thank you for mentioning it. This is my point. It's, you know, there's the perfect storm is there that with all these people coming in as well. Unfortunately, then there's more unscrupulous players than ever as well that are out to scam you.
Yeah.
And it's happening, you know, don't do it. But if anyone wants to go into their junk box at any time, there's going to be a scam around Bitcoin. Send me 1 Bitcoin, I'll send you 25 back. You know, it's just, people need to get that as soon as their financial literacy rates improve, that's how you tackle the scams. That's how you tackle the schemers and the unscrupulous players. So again, this is why it's so important now that we improve these rates with the young.
Thanks, Brian. And they'll also know that those who scam people rarely show their faces. They're always behind some screen somewhere. Gurav is here, Samuel is here, Brian is here. So they'll tell you straight. They'll not be hiding behind some. So be careful when you click on those links. And now we'll quickly get to Bernard Brian. You're there, you can hear me, right? Because every one of us can't wait to find out who wins the $2,000 and what we are going to, how you're going to help us on board if they're not already in FXPesa. I doubt that they are. So yeah, the moment we have all been waiting for. The floor is yours, Bernard.
Irene, good evening to all who are here.
Yeah.
Yes, so there's something my grandfather says, and he always tells me that if you think knowledge is expensive, try ignorance. So I believe the concept that we're trying to pass on here is also in light of financial literacy. And Irene, thank you also for giving us this platform. So a lot of people really wanted to get this $1,000 worth account, and it was a tiresome activity where we had to spend some time with Irene as well. And I don't know whether we can have some drum rolls or something of the sort, or I just dive into it. Okay, I'll dive into it. So our first winner is Valentine Musundi. And our second winner is Jeff Morage. Congratulations.
Congrats.
Thank you. Yeah,
yes.
Thank you. You heard that. The first winner is Valentine Musudi, and the second winner is Jeff Morage. I will have to say, and Bernard can attest to this, is that we looked at several things: the passion for investing, what you're doing currently in your life to make sure that you're driven, whether it's trading or whether it's looking for a job or anything else. You must demonstrate that there is kind of a driven spirit in you to succeed no matter what. And then we looked at whether you would pass on the knowledge that you're learning from FXPesa and trading and investment in general to the people around you, the youth especially, because we need that more than ever if we are going to rescue this country from always being job dependent and decide that you can take control and charge of your life and decide that you don't have to wait for someone to come and rescue you. And so these two demonstrated that they could do that. So Valentine and Jeff Morage, you've seen the number to text 40184, but we too will also be getting in touch with you to tell you of the next steps. Congratulations, and yeah, keep participating. We'll be doing more of this. And Samuel, I'll come back to you to ask that you give us an overview of the market and what you expect to be happening over the next few months. That's like 3 sentences or so. And then FXPesa, how we can get in touch with you, and that you can walk us through the process of onboarding. And then finally, Brian Grove, we would love to have you here again, because we do that all the time. John Ngumi has always been very good to us, coming back to address and see how far we are going. So Sam, to you.
Yeah, thanks, Irene. I'll let Gaurav talk about the markets, what to expect in a couple of weeks. And then Bernard, who's just finished on updating us, will also walk us through the KYC and the onboarding process, so that everyone gets involved.
All right. So
Gaurav, we can start with you on the markets. What do you see in the next 1 or 2 months?
Yeah, with a very immediate short-term view of the next 1 or 2 months, and just to keep it a little bit not very overwhelming for all our visitors, when you guys download the demo accounts, I want you guys to all add the VIX index, and I all want you to add gold, and I want you to add crude oil, and I want you guys to do some practice trades and some test trades with small quantities. Start with maybe 0.1 lots, 0.2 lots. And again, if this doesn't make sense, you can always contact our sales team. Why don't you try looking at taking buy positions in these particular products? And guys, again, this is for a practice account. This is not live advice. I would suggest to look at taking advantage of this current Russian-Ukrainian situation right now. So I do see opportunities in gold, and I do see opportunities in crude, 2 of which the products we've previously covered.
Thank you. And to you, Brian, we can expect you back.
I'm going to be on. I would love to be able to at some point meet as many people as possible in person as well. I'm back to Nairobi next week. I'm always in town, so it'd be great. Irene, anytime you need me, I'll be here, of course. Repetition is the key to mastery. So anyone that joined this and expected to walk away from it knowing everything, that's obviously not going to happen. That's why I would always recommend signing up with us. Please follow me on Twitter. We consistently go over the same things, so that we're all together in this, and we're all programming each other to understand the best step forward. And the markets are extremely exciting. Things change. So what we're looking at one day, we might be looking at something else the following week, but we're always educating each other. So I'm happy to come back whenever you need me and go over this again and more.
Oh, perfect. Bernard, have we left anything out? I think we covered most of what we intended to cover today. And what I would like to tell everyone is that we couldn't even touch on the learning bit. And that's where the 40184 number gets you in, and you start interacting with the team, with the platform. So make sure that you've got that. And Bernard, anything else? You're on mute, Bernard.
Sorry, I think the only remaining thing is just to pass on through the onboarding process. It only takes less than 5 minutes. You only need an ID and you set into this new and exciting journey. The most brilliant thing about this journey is that it expands your scope of knowledge from not only understanding what is a local concept, but also what it is like on an international scale. So the first point of action would be to text global. We made it quite easy for the purpose of this particular forum to 40184. And then we have a whole team ready to offer support, from education, from back office, from onboarding, from customer service. We are there for you. So I believe I've covered that. Back to you, Irene.
Yeah, perfect. Thank you. John Ngumi, do you want to say anything before I give a vote of thanks?
Absolutely not. As I said, I have been I've been a student today.
Absolutely not. Okay, all right. So And so Samuel, Brian, Gurav, and Bernard, and not forgetting Monica, Collins, and Vimal. This has been an exciting evening. I'm sure you can see that from the comments that if we had more time, we would probably keep going, but it's a start of good things to come because now we are addressing issues as opposed to addressing them with fear and suspicion. We can unpack this whole trading thing and make it relatable to everyone that's interested. I can't thank you enough for making the time to come and educate our members and give us tips on what we can expect going forward. And the overarching theme is that we don't have to be afraid to invest during an election season. You can structure your portfolio in a way that it doesn't feel those bumps of moving issues that have nothing to do with trading. So thank you once again, and I look forward to inviting you again, and then we can assess where, as a group collectively, how we are doing, whether we've made any money on FXPesa, because I know quite a few will be subscribing. They're already asking. And until the next time, remember to email me, irene@gathiaka@gmail.com, so that I add your email to the mailing list and we can give you more of these sessions. And Brian, you said we can interact with you on Twitter, so we'll be doing that. We'll forward FXPesa Twitter and yours to the members. I'll get that from Bernard later. Until the next time, everyone, it's good night from me, and we'll see you again next month.
Thank you so much, Aaron.
Thank you.
Thank you, everyone. Bye-bye.
Thank you.
you,
Have a good
everyone.
night.
Bye-bye.
Thank you. Good night.